Everyone, this is Joe from Data Finance. Welcome back to our channel. We are with you on 2nd of February intraday analysis. On this video, we will cover some news first, then we will just go ahead with our charts. First of all, I will start with an interesting news. On Reuters, just 1 hour ago, one statement has been published, and it says Putin is saying that US is trying to push us into a war. That means we don't want a war, definitely. As I said earlier, it's just too costly for Russia and it doesn't want that one. And why it does cost? Because they have experienced that one earlier. And just before Crimea, the ruble, USD ruble, was trading at 27, 29, something like that. Then after that one, after the Crimea war annexation, it just jumped to 80 from 27 to 80. So they have experienced that one. Double, more than double. Just imagine. Right now, it's trading at 77, 78 level. If it just gets double, more than 150. It's 150 for 1 USD to ruble. There will be civil unrest inside Russia and for Donetsk region. Crimea has a strategic point. It's just in Black Sea, and then it has ports, some other things. At least it just works to make a war with. But in Donetsk region, nothing else. Nothing. Just a destructed, war-torn piece of land. They don't want to risk that one. They don't want to risk that stability. Right now, oil prices and natural gas prices are high. They are just enjoying that one. They are not stepping back, and then they are just putting those tanks at the border. So this is the keeping the price of oil higher. As long as they don't do any attempt, there is no more sanction. They are just enjoying the price of that one. It's like a chess, and Putin just loves this chess so much. That's the only loser is consuming oil and natural gas consuming countries in Europe. They are just facing the real trauma of that one. All right, that was news. And we have received the euro area inflation rate. It has risen again to 5.1 in April in January. The main reason is oil and gas prices. That's really pathetic for European economy. Eventually, if these things goes like this, people will just spend less because of the inflation, and then it will just lead to a slowdown in all global economies. We don't want that. All right, the first chart is natural gas. So we have talked a lot about this, and then let's speak about that one. In gas prices, US gas prices, as you can see here, we see a rise. Like on Sunday opening, it just opened with a gap already, and then it's just like keeping the price high above the forecast, above 4.80. The main reason is the LNG need for Europe, because right now it's cheap in US, and then people like the companies and then the countries in Europe are buying US oil as LNG, so it's keeping prices high. Another thing is unexpected windstorms and snowstorms in US, just making the weather freezing, and some people have just suffered, and they have like a fatal consequence as well, and it just expected to go on a few more days. So demand side is growing and supply is growing as well in US, but not as big as not fast as demand. That's why the price is going high. But there is one thing: when we see a resolvency, we will see a fast decline. And just imagine $1 decline below $4. That means $10,000. Please just watch the news of natural gas and the weather forecast and everything. When you just see the opportunity, just open yourself position, and then you can just make good amount of money. That's really a good chance to make some money. We will see in coming days. we will just experience together. Let's look at our next chart.
You are ready to win with us. GAN Markets.
Alright, our next chart is US oil, crude oil. Alright, as you can see on the chart, it is testing high level, but the same level, not going high so much, not going down so much. It's just in a tight range, and this is making the traders unhappy. Alright, there is some volatility, but they don't see a really big volatility right now. And from this point, if you ask me, it's trading at a really good point to sell with US open. And today is important, by the way. I just want to remind you one more time. Today is OPEC plus meeting day. They will just decide the production for next month, and everybody is just expecting to stick plan with 400,000 barrel. But if you ask me, they will increase more than that level, because last month they couldn't meet the 400,000 barrel. So there is a gap right now in the market. So probably they will just on verbal confirmation, they will say it's 600 or 700,000 barrel rise in production, but in reality they will not cover that production goals, just like happened in January. So we have seen tight market going on, so kind of manipulation, but still it's working and they are enjoying these high levels. But the consuming countries will just find solution soon, and that will just affect the price of oil. Alright, as I said, it's a good sell point right now, as long as all these circumstances in Russia and Ukraine goes like this, not invasion of Russian troops to Ukraine. I'm not expecting that one. Let's look at our last chart. Alright, our last chart is USD Japanese yen. As you can see here, USD Japanese yen is on almost free fall. It's just declining, and RSI is just showing that as well. It's on buy point. So why is that happening? Because dollar index is just easing these days. It just tested high levels, but right now it's just testing low levels. But we know like March is coming closer, and then we are at the we are in February already. This month is the last month of quantitative easing. Then it will just finish this month. At the end of this month, there will be tapering finish, and in March we will see start of in March we will start off first rate hike. That's why dollar index eventually will go up, and then it will just make this jump. The recovery rebound will happen soon. That's why it's offering us, USD Japanese yen is offering us a good buy. Why I'm not expecting from Japanese yen? Because in Japan, is monetary policy has to go like this, because their GDP debt ratio is growing each day, so they cannot take this risk. If they raise the interest rates, so they will have they will need really high expenses on repayment of those bonds sold previously. They don't want this one. That's why we will probably see a rebound from this level. It may test something lower, but even right now, as you can see, not doing that one as well. It's going up, starting to rebound on this currency pair. Thank you so much for watching us. We will be together on more news, and then we will cover more charts with you this afternoon. Have a nice and profitable day. Bye.